On behalf of the Managing Director of the Ghana Stock Exchange, Ms. Abnamwa, I want to welcome all of you to today's program. The Fact Behind the Figures program is a program that has been designed by the exchange for listed companies and corporate issuers to provide financial performance updates, share the trends in the market, and then the strategic plans ahead. So this morning, we are happy to inform our audience that we have the leadership of FanMilk PSC to do the presentation to us today. So before I proceed, I want to also introduce the GNC team on the call. We have the Managing Director herself, Ms. Abnamo, on the call, Head of Strategy, International Relations, Mrs. Diana Okine, Head of Listing and New Products, Mrs. Joyce Sibuachi, Head of Trading and Surveillance, Mrs. Ared Bas Moses, Head of IT, Mr. Eric Edifo, Head of Finance, Mr. Charles Dixon Brown, Head of Legal and Compliance, Ms. Antoinette Yairate. So I also want to acknowledge the board, the management, and the staff of FanMilk PLC on this call. I'll now go ahead to introduce the executives who will be doing the presentation this morning. So we have Madam Carol Olympio, the Finance Director for West Africa, and Plum Fiagome, Head of Controlling Ghana and Francos, and then Madam Sandra Dujenfi, the General Counsel and Company Secretary. So they will be doing the presentation for us. So thank you very much. I'll now hand over to the FanMilk executive team to start with the presentation. But before they start, I want to advise that all of us mute so that we avoid distractions in the course of the program. There will be time for Q&A, and then when it gets to that time, you can unmute and then ask your questions or put your questions in the chat box. So thank you very much. Over to you, Madam Carol and your team. Thank you.
Good morning, everyone. So first, we start with who we are. So FanMilk is the trusted local brand which combines the backing of Danone as the global leader for health through food. So our mission here is to bring health through food to as many people as possible, and we are creating sustainable value to stakeholders. We are guided by our vision, One Planet, One Health, and also by our core values. And we are doing this by providing long-term growth, responsible business principles, and also creating value to our shareholders. We can go. FanMilk benefits from a well-established and stable shareholder structure. As of December 2025, FanMilk International remains the #1 first shareholders of the company through Danone, with an ownership of 62.1%. This demonstrates Danone's continuous commitment into the business and to the Ghana economy. The remaining shares are held by a diverse group of institutional and public investors, and they are ensuring the dynamism of the participation in the markets and also the strong governance for FanMilk as a listed company on the Ghana Stock Exchange. So now we introduce the company and also the economic environment.
To FanMilk, a bold business model that began in 1960, founded by Danish entrepreneur Erik Emborg, who launched the Ghana Milk Company. The company initially produced pasteurized milk, packed in cartons for schools, hospitals, and neighborhood provision stores across Ghana. Distribution was driven by vendors on bicycles, equipped with insulated containers, an approach that quickly proved to be a thriving and culturally relevant trading style across West Africa. This unique selling model remains the backbone of FanMilk's success today. As demand for indulgent treats grew, FanMilk expanded into chocolate drinks and ice cream, paving the way for its rise as West Africa's most beloved frozen dairy brand. By the late 1960s, the business had expanded beyond Ghana into Nigeria, Côte d'Ivoire, Benin, Togo, and Burkina Faso. In 2013, Danone, a global leader in food and beverages, acquired shares in FanMilk. By 2019, Danone became the major shareholder, reinforcing FanMilk's commitments to quality, innovation, and nutrition across all markets. Today, FanMilk operates a strong dual-channel model from manufacturing plants in Ghana and Nigeria. In 2025, FanMilk continues its leadership with net sales of 87 million euros and volumes of 87 kilotons, solidifying dominance in frozen dairy and ice cream across the region. FanMilk provides more than 20,000 direct jobs and over 30,000 indirect jobs, with products sold in over 50,000 outlets, from modern retail to neighborhood shops. Today, FanMilk stands as a regional icon with beloved brands such as FanYogo, FanChoco, and FanIce enjoyed by millions. Our vision remains clear: to lead in nutrition, sustainability, and innovation, delighting consumers, empowering communities, and driving growth across West Africa.
First, we start with the macroeconomic environment. So if we look at the key indicators, they have improved materially over the past 3 years. Inflation has declined, and after the peak of 2022, we can see that in July 2026, this year, we've dropped to 4.6%, and this has restored consumer purchase power and also eased the pressure on the household spending. And on the other hand, GDP has accelerated above 6%, demonstrating the strength and resilience of the Ghanaian economy. And lastly, but not the least, we have seen also that the cedi has strengthened. And this has gradually also reduced the imported inflation and helped on predictability of the cost impact. So taken together, all of these trends are enabling positive, favorable conditions for consumption, for investment, and also for business growth. So now let's move on to FanMilk and how we have done during the year 2025. So after the 2024 turnaround of the business, 2025 was the focus on sustaining the double-digit growth through prioritizing and getting discipline on the fundamentals. We have done this by concentrating on 3 priorities, 3 pillars. The number 1 being the strengthening of our channel execution, and this has resulting in the strong growth across both our route to market, outdoor and indoor, growing double digits versus 2024. The second pillar and the second big prioritization was our investment behind our core brands. And this is the investment behind what are the biggest pool of value for our businesses. The last but not the least is also the reinforcement of the towards mental availability. So we want to remain top of mind for our consumers, and we have done this with targeted brand activations and also engaging through the community with initiatives. This has helped to communicate and to strengthen connection with all our consumers. So this is what has helped FanMilk to strengthen their and sustain momentum in 2025. We now go to the financial performance, and KP will take the lead.
All right, thank you. We'll first look at 2025 in retrospect, and then how we fared in first half of the year 2026. And so we'll start with a little clip for you to see what the journey has been.
There was a time, not so long ago, when the engine stalled and progress felt like a distant dream. Between 2019 and 2023, FanMilk Ghana faced its toughest road years. Outdated systems, operational challenges, disconnected structures. But beneath the rust and the struggle, the engine never truly died. It waited for the spark. Then came the ignition. In 2024, we rebuilt not just the car, but the entire roadmap. New leadership, bold commercial ambition, renewed focus on consumers and performance. We didn't just accelerate, we took control. From silos to synergy, from lag to lead. FanMilk Ghana was back in the race and gaining speed. Our journey is no longer about catching up. It's about staying the course and accelerating growth. Grounded in purpose, fueled by people, and focused on the future.
All right, thank you. I think this sets the tone for everything. 2024 was our reset year. We went with the tagline, Bring Back the Pride. As you can see, 2025, we grew our top line by about 46%. We grew our top line by about 46%. We joined the billionaires club when it comes to the FMCG space. And so 2025 was a defining year for us. Again, we grew double digits in terms of profit and then earnings per share. Just to also make note of the point that we also reinvested in the business, both in CAPEX and in OPEX, to ensure that the business is future fit and we can continue to make these returns for our shareholders accordingly. A few liquidity and then efficiency KPIs. The main thing is that we've been through a journey. From 2021, we were actually on a bank loan. And so in 2024 is when we fully paid our bank loan. Today, FanMilk is one of the entities that are actually debt-free when it comes to bank loans. We do not have any bank loans on our balance sheet, which is why this is very important to us. Our current ratio, we improved to 1.4 times what it was the previous year. Again, our return on assets and return on equity are showing good utilization and efficiency in the use of both our assets and equity. And then our asset turnover is showing how strongly our asset utilization is going. Just to make a little point here, as at the end of 2025, cash to total assets was around 35%. You see a different picture when we come to H1. It's important to note this once we get to the asset turnover for the first half of 2026. Now, first half 2026, how have we fared? As at the end of June, this is an audited financials, just to make that point clear. Our top line has improved 25% on the back of volume growth. Our profits have also soared to 89 and then above 200% respectively when you compare year to date this year, first half of this year versus first half last year. Again, good indicators when it comes to our liquidity and efficiency ratios. Similar trend that you saw in 2025 is what we are seeing half year this year. It's on the back of all the projects that we've embarked on. Project Sankofa, touching vendors, agents who we call our heroes. Basically, we engage with them to make sure that they are still in touch with the business and they feel part of this business. We've done this consistently and we'll continue to do that. We also continue to invest in the business to make sure that these ratios do not go the other way. And on that note, we'll go to some of the sustainability efforts that we've put in place, and that is where Sandra, my colleague, will take over. Thank you.
All right, thank you, KP. We are happy to share where we are and where we are going on our Danone Impact journey, which is really FanMilk's version of sustainability or ESG journey. And so here I'll provide an overview of our phase 2 of the Danone Impact journey and then highlight some of our key local achievements in 2025. So as you can see from this slide, our DIG is built on As you can see from this slide, our DIG is built on the 3 pillars of action. Here you see health, nature, and then people and communities. And the DIG really is centered around our mission, as Carol earlier mentioned, of bringing health through food to as many people as possible. And you can see that in the middle. It is at the core of our approach, and as a company, we are proud to be fully committed to pursuing specific social and environmental objectives alongside business performance and profit. And as management, we track these KPIs every quarter through our management meetings, and it comes under our internal control umbrella, that is DANGO. So it actually receives the same level of focus and scrutiny as our business performance indicators. And beyond local oversight as well, our progress is also reviewed through the Danone Way. It's a Danone framework, a global framework, where we report on our achievements, the actions taken, and any obstacles requiring attention. And moving on, we'd like to highlight our 2025 achievements, and this demonstrates our consistent and progressive effort and meaningful impact. So you see on the health pillar, we are pleased to share that some selected SKUs or products have achieved a 4-star nutritional rating, and this reflects the continuous improvement made to their nutritional profile. We continue to demonstrate this as an ongoing commitment to ensuring that more products exceed the 3-star benchmark and progress towards higher nutritional standards. We also have our iron and calcium fortification initiatives. They have really progressed successfully through the pilot phase, and we are with the next steps for validation. On the nature umbrella, through our FanMilk School Caravan initiative, we have recovered over 11.2 million wrappers during the reporting year, and it also demonstrates the growing impact of our efforts to promote responsible waste collection and then strengthen our community participation in environmental stewardship. We have also deployed the 4R approach in our factory, and this is around efficiently using water, reducing water, reusing, recycling, and recovery initiatives. And it also forms part of our broader commitment to responsible resource management. We're also pleased to announce that all our packaging materials are now recyclable, marking an important milestone in our packaging sustainability journey and contributing to a more circular economy. We continue to make progress in reducing our environmental footprint through investment in cleaner energy solutions with the ongoing installation of some solar panels across our facilities. I think the major highlight on our people and communities pillar is FanMilk achieved B Corp certification, and this reflects a commitment to balancing our business performance with social and environmental responsibility. And we are here proud to say that we are the biggest FMCG across West Africa to have achieved that. FanMilk and a part of the Danone Group is also living wage certified, which recognizes that we have a fair and equitable compensation policy for all our employees. And then lastly, 100% of all our employees are also covered by DanCares. And here, the benefits includes healthcare coverage, income continuation insurance for up to 12 months for employees on leave due to critical illness, and then employee assistance programs that extend to both employees and their immediate family members. So this largely reflects how we are progressing on our sustainability journey, and we look forward to making more impact in 2026 and the coming years. So I'll hand over back to Carol.
Thank you so much, Sandra. So what we need to remember, what are the key takeouts? Number one, 2024, KP said it, we have reset the business. We wanted to focus on fixing the fundamentals and to go back to a base that is strong. Now in 2025, we have managed to leverage the work done in 2024 to push the business forward and to sustain the growth momentum that we achieved in 2024. with product availability, continuous product availability, continuous investment in our cold chain and in our route to market, and also continue availability in system and people. In 2026 and 2030, what we want is to accelerate how we go beyond, how do we do better, how do we do bigger. So this is what we need to take out from this presentation today. Thank you.
Jerry, one more. I think that there's a big disclaimer here, which has to be clear. This is not to solicit for you to buy or sell the stock, okay? It's to provide you background information and the necessary information for you to use and understand the potential of the business. Thank you.
Thank you very much. And a big thanks to Karen and the team for this elaborate presentation. So our distinguished audience, it's now time for comments and questions. If you have any question, you can put it in the chat box or you can raise your hand and I will call you to ask your question. Thank you.
There's some questions in the chat.
Yeah, I think there's one question in the chat box from Kwabnalt. Would you want to read it?
Yes, let me read it. Okay. So Kwabnalt is asking, FanMilk has delivered significant growth in both revenue and profitability in recent years. Will management provide more color on the key drivers of this growth? How much of the margin expansion does management believe is structural versus driven by temporary factors such as pricing or input cost? Thank you.
Thank you so much for the question. So 2025 was not only driven by price alone, it was also anchored into a solid volume growth. And of course, selective prices where it was necessary. We have achieved stronger market execution. And as I mentioned before, we have improved on our product availability. We have expanded in our distribution. We have better last month reach.
But the backdrop is a visible country.
Hello?
The backdrop from there.
Yes, it's complex.
Apart from that, you say PBX.
Hello.
Hello? Please, can anyone be muted? Okay, please go ahead. Thank you.
Yes, so I will continue. So we have also continued investment in our cold chain structure. So all in all, to say that we have sustained the growth with fundamental structural changes and benefit that we're getting from them. So not only on price, it's always a balance and a strong anchor on our volume growth as well.
Okay, so we have a couple of questions from Emmanuel Dajo. So Emmanuel has shared, is asking 5 questions. That's very loaded. So let me read them and then I think we'll take them one after the other. So I'll read the first 3 and then you address them. Then I'll go to the 4th and the 5th. Okay, so hello. Okay, so concerning the recovery of lost volumes with the 5-year 100 kilotons roadmap indicated in your full year 2024 annual report, how much has been achieved so far? Let me take it again. Concerning the recovery of lost volumes with the 5-year 100 kilotons roadmap indicated in your 2024 full year report, how much has been achieved so far? Question 2. What is CAPEX plan for full year 2026? Question 3. Are there any plans to increase local sourcing to mitigate exposure to Forex? If there are, what is the percentage of local sourcing target you are expecting to achieve in the near to medium term? So I think we can take these 3 and continue with the rest. Thank you.
All right, I'll start with the volume recovery. So, sorry, as at the end of 2024, we finished on approximately 47 kilotons
Sorry, we need help with the muting.
Which one I join with the other app, or which one I join with web?
Hello, please. Please, if you are not speaking, please mute. Thank you. Please go ahead.
All right, thank you. As at the end of 2024, we finished on 47 kilotons approximately, and 2025 was a 20% growth on this. So we finished on approximately 56% kilotons. This is about 56% of the ambition of 100 kiloton that we presented to you on Facts Behind the Figures last year. So basically, that's the journey on volume.
Next one is on CapEx.
Okay, CapEx.
The next one is the CapEx plan for full year 2026.
I mean, we remain committed to continue investing in the business to expand. We are not going to just specifically mention all the CapEx plan we have, but we have projects to continue on sweating the asset that we have and expanding where we can and where we believe there's the growth potential. So if I take as well on the local sourcing directly, of course, we are on a journey. We have improved almost 4% on the local sourcing of our raw and packaging material since the past 5 years. This takes time. As we know, our number one entrant is skim milk powder. But on the other entrant that we have made deliberate effort to focus on local providers, especially on an example of the cocoa powder, where we are using a local partner to expand on this journey of local sourcing. And we agree that we want to disconnect as much as possible from the impact of the currency. And we have strong attention on the topic. Thank you.
Thank you. So we'll go to the fourth question from the gentleman.
On the operation cost being...
yes, operation costs remain, yes. If you can take that one. Thank you.
Yes, okay. So as you know, cold chain expansion is cost intensive. We are in the business of cold chain. In the short term, it is an investment that we need to take. And as you also probably know, we went through a period of dip where investment was complex and there was lower investment in the business. We are now catching up, and it's essential that we focus on this for the future of the business. So we need to, for the type of product that we have, availability depends on this cold chain and reliability of the last mile execution. So we need to provide quality and affordability for consumers. And this comes at the operational cost that we have right now, on top of course, inflation and external factors.
Okay, please. So the fifth question is, how many agents and vendors do you currently work with? And has there been an increase in the number, and by how much?
Okay, we work with approximately 800 agents, and then the total vendor base is close to 8,000. Year on year, the daily active out of this is about 70%. That's at the end of 2024, it was around 60%. Daily active out of the total 8,000, I mean. This has improved by about 10 percentage points year on year, and is hinged on all the projects that we've embarked on over the years.
Okay, thank you. So we have some questions from Kwabena Otin. The first one is, given the great improvement in performance over the past few years, what does management see as the key drivers of sustainable growth over the next 3 to 5 years? Second question is, the improvement in operating performance has also translated into a significant increase in free cash flow. How does management intend to deploy this stronger cash generation going forward? Should shareholders expect higher dividends or reinvestment in the business, or potential expansion or acquisition opportunities? Thanks.
Okay. So let's take one by one. We will take the first one, the improvement. I think you mentioned already that what we want is to continue not being shy on the way we invest in the business and the quality that we provide to our consumers. This comes from the good execution that we have in trade. This comes from the last mile execution. This comes also internally with our way of distribution to our trade partners. So we have mentioned it already, and this is what we want to continue to do and to provide the best quality, affordable product to our consumers. This is the best way to do it. The next one is on the cash, right? What was
improvement.
So in the improvement of the cash and what will be translating into the improvement of the cash gives us flexibility, right? So it goes very well with the first question. This improvement of the cash gives us flexibility, it helps us to prioritize on the growth internally, and is also supporting what we want to do in terms of distribution infrastructure and then strengthening the supply chain. And obviously all of this to help on operation efficiency. So I hope this is also
should investors expect higher dividends? I think at the AGM this was clearly answered. We don't have a dividend policy, but we go by a convention, which is the percentage improvement in our earnings per share. That is the convention we'll still be going with. As Carol already mentioned, there will still be reinvestment in the business, and where there are opportunities with expansion and acquisition, we would also take those opportunities.
I mean, we believe that the investors have also shared the increase in the earning per share that we have posted for the year 2025 as well. So this is also in line with the results. So what is next?
So what do you consider to be the most significant risk and challenges facing the business for the next 12 to 36 months, and how is management positioning the company to mitigate them?
So of course, as for risk, the risks are both. It can be both internal and external. In terms of external, of course, we see that in terms of macroeconomy, the economy has strengthened. So if we were to continue on this stable trajectory, this would also help us significantly. If it goes otherwise, you can imagine also what would happen. We are still building a resilient business more and more to external factors. We mentioned it before with the trajectory to localization of parts of our incomes. In terms of risk, the business is focusing right now on quality of the product, on investing in the cold chain. This is very important as well to avoid any risk, because you know that this is the biggest competitive advantage for our business. So these are what our priorities are at the moment.
Okay, thank you. So let's go to the other question from Sadia Elias. So could you elaborate on any export strategy and ambitions? Which markets present the most attractive opportunities, and what milestones should investors monitor over the next few years?
So in terms of export strategy, we have always, for the past couple of years, been an export hub, especially to our Francophone countries. We're continuing to be this hub in the coming years. We believe that it is a way to strengthen our cash position as well, but also to strengthen our position within the West African ecosystem and ECOWAS. So the strategy is the same, and we have attracted all of these opportunities before. You know that we are at the center of Togo and the Côte d'Ivoire businesses at the moment. You should continue monitoring this. It's going to stay.
Thank you. So we have another set of questions from Cabinet team. So with Ghana now operating in a significantly lower interest rate environment, how does management expect this to impact FanMilk? Specifically, do you see opportunities to reduce financing costs or deploy capital more aggressively? And then the second question is, what new product categories or innovations is management currently considering to capture emerging consumer demand and drive the next phase of growth? Are there particular segments of consumer groups that FanMilk sees as under-penetrated? Thank you.
I think on operating a significantly lower interest rate environment, I think I mentioned earlier that today, thankfully, we've paid all our debt and we are debt free. And so we are not really, this doesn't pose any risk to us. Where there are opportunities to make use of this, definitely we'll take those opportunities up. On new products, innovations and co, yes, there are things in the pipeline. This is not the platform to say everything, but I'll just say watch the space on new innovations and then product categories so that nobody gets a wind of what we have in our back pocket. But watch the space.
Thank you. So there's a question from Professor Seriram Kao from UCC. So what are the sustainability plans for 2026? And what percentage of profit is devoted to ESG initiatives? Thank you.
Okay, sir. I'll take that question. We don't have a set amount of percentage of profit devoted to ESG, and this is why. And it's not because it's a bad thing. What we do within the Danone Group is a top-down approach. So, like I mentioned, there are 3 pillars that across the Danone affiliates that we are all chasing across health, across nature, and then people. So I could highlight some of the sustainability plans that we have, like overall or generally. On people, what we are trying to do, or we have KPIs under equipping and empowering our employees with skills and capabilities of the future. So we have a KPI under it. We also have a goal to foster a unique and inclusive and diverse culture within Danone. If we come to the health, like I mentioned, we are trying to offer tastier and more healthier food and drinks. So we have selected KPIs, and it's so improving the product quality, the nutritional profile. So with an ongoing project, I mentioned that the pilots had already been successful. So we have a set time to make sure that we have achieved those targets in promoting healthier choices as well. And then generally, investing in nutrition and hydration. So that is one of the goals under health. On nature, is really driving best practices in class when it comes to water, and then driving the transition to a more circular packaging system, and then cutting waste across the value chain. And for each of these goals, we have selected KPIs that locally we are championing with targets that are closely monitored. I hope that answers the question.
On the next question on the capacity, so we are not disclosing full capacity of our manufacturing and then the output and the details. But what we can say is we are committed in sweating the assets, and it is actually very visible in the increase of volume that my colleague KP just mentioned before. And if you look at the production volume and then the output that we get from there, you will see that our focus has remained on our core products. We've mentioned it before. The core products are what we are focusing on within the factory, and this is what also is deriving the mix that we have currently, with the focus on the dairy production. We mentioned already on the product launches, we're not going to repeat.
So, okay, so there's a question here from Ezu Peter. How about this question from Isaac Isel on sustainability? How is FanMilk managing the effluent waste from its operations?
So, as we mentioned earlier, we are highly committed on the environmental management systems in our business. So here we have a wastewater treatment plant, and all our wastes are segregated or separated and also treated to meet the standard requirements of the regulatory offices. So this is key for us across all areas.
think it goes with the second question.
Yes. So the second question is, apart from school caravans, which have contributed significantly to mobilizing and removing considerable volumes of waste. Okay, what is the strategic roadmap for sustaining this initiative and extending its coverage beyond Greater Accra? Specifically, what are the proposed timeline, resources, partnerships, and implementation mechanisms for scaling the initiative nationwide? So this is a question from Peter Lawson.
Okay, so just to touch on that, we've partnered with a number of waste management companies who actually carry these plastic waste that we have. As we mentioned earlier, they are 100% recyclable. And so they are transformed into other products that are beneficial to the environment. And we continue to drive this initiative, not just it's nationwide. It's nationwide, it's not just Greater Accra related. But there are proposals that have come specifically for other regions, and we'll look at them depending on the needs of the business. But we are really committed to ensuring that waste is managed to the greatest extent. Thank you.
And just to add that even at a global level, there are also a lot of projects to get biodegradable packaging material going forward to make sure that we are environmentally friendly.
Thank you. Okay, so there's a question here from Mamani. He's asking, how do you measure ESG? Webster benchmark do you use? And then the second question, does your ESG consider the third-party staff, as in those who do the street vending on bikes? Thank you.
Okay, I'll take that up. We measure ESG through a combination of internal performance indicators and internationally recognized external frameworks. So our approach is basically designed to ensure that the ESG performance is measurable, transparent, and linked to our long-term business value creation. And yes, our ESG takes into consideration the vendors on the street. So we have the vendor academy as well. That takes them through a pipeline of education and training.
Thank you. So there's a question from George Riafe from Joy FM. Is the tax environment now okay for the firm, or there are still some challenges that government needs to address? Because there are some beverage firms that are currently complaining about the revised excise duty bill passed by Parliament. So this George Riafe from Joy FM. Thank you.
Okay, so what I would say is businesses are always looking for opportunities on how to make enough returns for our shareholders. We continue to engage government to look at ways make the tax environment. I think for now it is fine. We are still doing engagements with government to see opportunities that are there to ensure that the business is still sustainable in the future. And thank you, George Riafe.
Okay. Okay, so there's a question from Kabana Otain. I would like to say a big thank you to the management of FanMilk for the remarkable turnaround story the company has delivered over the past few years. It's encouraging to see the company constantly drive growth while maintaining strong operational performance. The progress made so far is a testament to the commitment and strategic direction of management. As shareholders, we sincerely appreciate the work that has gone into creating this value, and we hope to see this positive momentum continue well into the future. So this a compliment from one of your shareholders, which is very positive.
There's a hand up from Papa Blankson, if we could.
Yes, yes, please go ahead.
Hi, good morning. So I have 3 questions. So I'll start with this. So at the risk of maybe the management repeating themselves, I want to understand specifically what the challenges were in the period of FanMilk's dip. What specific challenges were happening? What was happening? And then what specific things have been done to turn around and to fix those challenges? So I'm sorry if management have to repeat themselves, but I just want to clearly understand what's happening and what has been done. So that's my first question. My second question is I want to know on FanMilk's side to who is their biggest customer demographic, who's the biggest type of customer? I want to get that a sense of that if they can share with us. And then thirdly, I want to know what their best seller, what category their best product seller is, and what if they have a view of the market share that particular product has on the Ghanaian market. Thank you.
Thank you for your question.
Neleso, could you please mute? Neleso, can you please mute? Nelson, can you please mute? Thank you.
Thank you. So the challenges of the turnaround and the challenges were addressed through a holistic plan that we conducted in the business. Everything starts with people. So we are winning with our people today because we have been able to invest behind resources, talent, and capabilities. We've also, and we are going to continue doing this in the coming years, of course, we are focusing on the core. I think we've mentioned it several times as well. And the fact that we are actually investing behind the big value for our business. The pouches that you enjoy, and then the yogurt that you enjoy, the ice cream that you enjoy. And this has been our focus, to not only provide availability of this product at any point in time, but also to ensure that you have it at the highest quality.
Hello, please. Nelson, could you please mute? Mr. Nelson, kindly mute.
And this quality that which is our promise, is also coming through the investments that we have built behind. So we also invest in our coaching. We invest in the assets that we have at the factory, and all of this helping us to build a competitive advantage and our strong execution in the market.
Hello, Nelson.
The way you use the app,
Hello, Mr. Nelson.
it's the same thing to work.
Can you please mute him?
It will work like the normal one, the standard one, the correct one.
Yes.
Unless the other try to change the
Hello, Nelson.
They have to.
The other end, so it will work. But that's not the standard. So
Jerry?
Jerry should meet them.
Hello.
You feel it. I'll do how you do it so that you all do it.
I don't even remember the question itself. Like second.
Hello. Hello. So our apologies for the mix-up. So our FanMilk IT team, can you please meet everyone apart from the one who is speaking?
So I will try to repeat, but I will do faster. We said first, we are winning with our people. So nothing is possible with people. So we have invested behind the people capabilities and resources. And we are going to continue doing this in the coming years. The second focus was, and I mentioned it before, on the core. So we wanted to focus on the product that has always been the success of the company. Okay, and then we have done a simplification of our portfolio to help as well on the operation side to free capacity and to be more efficient. We have done that without also compromising, because we have simplified, we have not compromised on quality. We are actually continuing to provide recipe superiority for our customers. And to be able to do that, we need to continue to invest in our coaching. Okay, so the route to market is driven by a big investment that we have to do behind our coaching, because they secure this quality that I mentioned before. So these are the pillars, and that help our growth momentum in 2025. And this will be also the base on which we are continuing for 2026 and beyond. The second was on the portfolio and which one actually is our biggest brand. I mean, I think it's not going to be a surprise for any of you that FanMilk is our crown jewel, right? So FanMilk remains what we are the most proud of. We are proud of all of our products, of course, but it will not be a surprise to say that FanMilk is our biggest brand. The last question was on the
last.
Yes, so sorry because of all this noise, it was complex to remember on the last, but there was
So I think George Riafi of Joy FM is still not satisfied with the initial response on the tax environment.
Yeah.
And he actually indicated that he's not satisfied. And that if it is fine, why do you need to go and engage further? So he wants you to really shed more light on this one.
I think we'll recruit George Riafi on our advocacy agenda. Yes. So George, you can help us. We'll engage you so that you help with the advocacy on Joy FM and your sister stations. But yes, as I said, we continue to engage and we would even recruit you as part of to be part of this advocacy. Thank you.
Thank you. So there's this question from Adebayo Adedeji. In Q1 2026, income tax was quite significant, 32 million versus a profit of tax of 61.1 million cedis. Please, could you provide some more color on this? Thank you.
We did our own self-assessment using our tax consultants, and then we took a provision. I won't mention the figure, based on prudence. So that is what is accounting for this jump that you see.
Yeah.
Thank you.
Thank you. Okay. Someone is asking, Mamen, how do we get your ESG specific report on your website if it's available?
So yes, it is. We printed and added to our annual reports, which can be found on our website. So you will find that for 2025 on our website.
Okay, thank you. And then there's another question from Kwame. He said, could we ask that in future earnings report, FanMilk provide more details on the product breakdown and each product's contribution to total revenue? And there's a second one. Okay. Papa says, well, my questions weren't fully answered. So Papa, if you can let us know which question you are talking about. So let's go to the Kwame question on the future earnings report, providing more details.
Kwabena, we live in a competitive environment. We'll provide as much detail as possible so that competition doesn't take hold of things. And so we'll do our best, but it won't be very detailed because of the environment we live in and for competition not to take a hold of that information and make use of. So that would be my answer to you, Kwabena. Thank you.
Yes, thank you. So my question about the part of it was answered. The third question, the FanMilk being the biggest brand. My question was, okay, so what category does it fall in, and what is the market share? What market share does it have among similar brands on the market? What's where does it, if the team has answers for it? And there was a second question too about who are their biggest consumer, what's the biggest consumer demographic? The reason I'm asking this question is that, so for my generation of Ghanaians, FanMilk was like the biggest ice cream brand. It was everywhere. It was top of the head. Everywhere you pass, it's there. I think that it has changed over the period because some of us have children now. It may not be the same. So I would just want to understand if what's in their view, what demographic makes up their biggest consumers.
So in terms of market share, we have not, we are not going to disclose market share for FanYogo. And in fact, if we look at the details of the market share and the research data that we have, it's not exactly frameworked to cater for the type of product that we have. So this one will not be, unfortunately, satisfactory for you, but this is the truth. But we can tell you that we believe that FanYogo has a fair share of the market and FanMilk has a fair share of the market today. On the demographic, I would have loved to have the new generation as well tell what they think, but I believe that we are actually cross-generational. We are a product that has been traveling throughout the years. We have actually also been celebrating more than 6 decades now. So we have recently engaged with different campaigns, and you should see and watch us on the streets. You will see us through social media, but also in the streets of Accra, with directly our consumers. They are young. Actually, the young generation are very much resonating with the brand, and we will continue to do so through our different channels. I don't know if anyone wants to add.
Thank you. So I think we have exhausted all the questions. It's been very interesting and very engaging. We don't have any more questions in the chat box. Neither do we have any hand raised up. So maybe this will be the last question. Danone currently holds the 62.11% stake previously owned through FanMilk International AS. Should we expect a further floating of shares in the near term? This from William BSG.
I think this I'll defer to our owners. They are the ones owning the 62%. Depending on that direction that they want to go, they'll decide on this or otherwise. Thank you.
Thank you very much. So thank you very much, our audience, for the questions and the comments. We'll now call on our Managing Director, Ms. Abnamwa, to give us the closing remarks. Thank you.
Thank you very much, Jerry, and good morning to the entire FanMilk family and to Ghana's capital markets that's been assembled on this call today. Over 120 of you asking very, very probing questions. On behalf of the Ghana Stock Exchange, I extend our sincere appreciation to the board management and staff of FanMilk PLC for very engaging discussions today. I am proud to declare myself as the generation that grew up on the jingle called Fun Eyes, so nice, 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 you know, and I was dancing to it. And my son has continued in that vein, and every time we hear the popping, I mean, we are rushing out to find our favorite vendor of fun ice cream products. So thank you for being a part of the GSE story, and thank you for continuing to engage with investors through our facts behind the figures. We take a special note of your sustainability efforts, and we want to congratulate you and my colleague Diana, who is on this call, who's been working with you and other issuers to upgrade our sustainability reporting standards and align it with new developments in the market. I'm sure we'll be happy to see the work FanMilk is doing. For us, the facts behind the figures tool is important because it offers investors and stakeholders and the broader market community valuable insights into the performance of issuers on the market. And as you've heard from investors, they are looking for even opportunities for further FanMilk shares so they can trade in these securities. To our investors, market participants, our media, we appreciate your active engagement and continued confidence in the market. And it's heartening to have people like George Boache still going at it and advocating for the Ghana Stock Exchange. Before I conclude my remarks, please allow me to talk about the thing I'm most passionate about, which is the market and how we are building on the market. As many of you know, the equities market continues the bull run that it's been on for almost 3 years now. And so far this year, the composite index, which looks at the performance of the companies listed, including FanMilk, from a price appreciation point of view, is up over 70%. The financial stock index is also up over 75% so far year to date. In terms of volumes traded and values traded, we are seeing double what we were doing by this time last year on the equities market. And through the tools and platforms that some of our stockbrokers have launched, we are seeing actual trades growing exponentially. A year ago today on the equities market, we were doing about 25,000 trades per month. This year, we are averaging almost 300,000 trades per month, and it's really through the platforms, the investor apps that have been launched, and we encourage the market to do more. Our fixed income market continues to recover and stride. As at the end of July, the volume traded of 255 billion securities was already more than the entire traded of 245.8 billion volume traded last year. So as of July, we have exceeded all that we traded last year. The market from a primary issuance perspective is also growing. You've all seen in the last 6 months, we've had 3 new IPOs after going for a long period without any. And I'm happy to also inform the market that there's a new issuer accessing our corporate bond market. And we hope in the next few weeks to be able to add this company onto the fixed income market as well. At the GSE, we continue to invest in infrastructure and markets to provide diversity and resilience for our operators. And so our green and sustainability segments of the market, our commercial paper market, the alternative market for equities for SMEs, the corporate bond market, as well as the main market for equities and the OTC market for unlisted public companies are all open for the market and for use by investors and for use by issuers on the market. We really are the market for capital, and we call on all our existing issuers plus potential ones to really look at the GSE and consider us as a platform for raising capital, because the investors today are telling us that they are ready, able, and are well informed to engage with you. I say a big thank you on behalf of all of us at the exchange, for all of you who joined us today, and we continue to look forward to partner with FanMilk for more engagements and in the years ahead and the months ahead. Thank you for your time, and we wish everyone a fantastic rest of the day. Stay well and blessed.
Thank you.
Thank you.
Thank you very much, Ms. Amwa, for your closing remarks. So on this note, I want to thank everyone, the leadership, the board, management, and staff of FanMilk PLC, and all our target audience, our audience who joined us today, fund managers, stockbrokers, asset managers, academia, our media partners, shareholders, and the investing public. Thank you very much for your time. And we hope to see you again on the 28th of August, where we have another fund bigger session. So until then, thank you and enjoy the rest of the day. Bye-bye.
Thank you.
Thank you.